Good day, I'm Chartered, your accounting tutor. In today's class, we are on control accounts under financial accounting. Control accounts. Control account is one of the key topics in financial accounting because it has a relation with many topics. With control account, you can be able to prepare what is called single entry and many other topics that are related with control account. And that is the reason why we are going to take time to make sure that you understand what control account is all about and how it is prepared in financial accounting. What is control account? A control account is defined as a memorandum account, the balance of which reflects the aggregate balances of many related subsidiary accounts which are part of the double entry system of bookkeeping. That is, a control account is defined as a memorandum account. On top of a memorandum is an account that brings many other accounts together. So like we talk of a memorandum of an association, it is a document that contains all the rules, almost all the rules, the operations, and many other guidelines to the company. So a memorandum account is an account that brings many other accounts together with the purpose of coming out with a single understanding of what the organization is looking for. And that is why a control account is defined as a memorandum account, bringing different accounts together under one place like a trial balance. That is why it's referred to as a memorandum account, an account that brings different accounts together to achieve a certain purpose. So now, we say that a control account is defined as a memorandum account, means account that have many other accounts together for a given purpose. The balance of which reflects the aggregate balances of many related subsidiary accounts. You know what a subsidiary account? The sales day book, the purchase day book, return outward, return inward. The subsidiary, the balances, the aggregate balances, the final, not individual balances, but the aggregate balances, the total balances in sales day book, in the purchase day book, return outward day book, and what have you. The aggregate balances in all the subsidiary books, which are part of the double entry, because we know that in accounting, if you post transaction into subsidiary books, you have to balance it and transfer it to the ledger account. And that's what they're saying are part of the ledger account. When the transactions are posted first in subsidiary books, they are balanced and then transferred to the ledger account, which they are balanced and then extract a trial balance. That's why I'm saying that it is an aggregate of all the subsidiary accounts, the aggregate, the final total, which are later transferred to the ledger account. That's what they say that part of the double entry system. That is the meaning of control account. It's a very powerful account that helps the organization to have insight into many things that happen in the process of keeping accounting record. So let's quickly look at the benefits and advantages of maintaining control account or preparing control accounts. Number one of the benefit is provide a check on the accuracy of balances in the ledger account and the subsidiary account. It is a check, just like a trial balance. When you post transaction into ledger account, you prepare a trial balance to see whether the transactions that were posted into ledger account are correct. Though sometimes the trial balance will balance, but the transaction will be wrong. And that's why we have errors affecting and not affecting the trial balance. But a check, an account must be prepared to determine the check. So a control account is just like a trial balance, which is prepared. By the time you bring all these accounts together, especially that are related to sales and purchases, you will check and know whether there is an issue, whether everything that was done is correct. Therefore, it serves as a check. When these accounts are individually in their respective areas, it becomes difficult for you to know whether there's something wrong or not. But by the time you bring them together, it becomes easy for you to detect whether there's an issue in any other account. And that is one of the reasons for preparing a control account. It's just like a trial balance. But here is specialized in accounts that only relate to either sales or purchases or the type of control account you want to prepare. If you want to prepare, for example, wages control account, you want to bring all forms of wages into one account to see how you have a unified figure or a definite figure in wages account. So if there's any issue, you now detect. But the type of control account we are going to emphasize here are two. When we're coming to that, then that is it, because it's prepared to check whether the balances, the final balances in the individual account prepared are being accurate the way they're supposed to be at the end of an accounting period. All the time, the business want to know something about it. Second, it helps in grouping homogeneous accounts together. Homogeneous here means accounts that are related. You know, business is all about buying and selling. So there are transactions that relate to buying of goods and services, and there are transactions that relate to selling of goods and services. So you group homogeneous means the transactions that relate to purchases, all the transactions that relate to purchases, they will be grouped together. That is the homogeneous, they are alike. Then transactions that relate to sales, they also group together, they are alike. That's why I say homogeneous. You not just group, you group them based on which transaction relate to which account. That is the work of control account. It helps in grouping homogeneous, that's like accounts, that is transactions or accounts that have like or that are related to each other based on how the transaction occur. For example, if we make sales and there is return inward, you know that the return inward comes as a result of sales made to customers. They know that return inward is related to sales. If the sales, I don't know, that the payment was not, the amount from the sales was not received, or and it result of bad debt, it is clear that the bad debt account will relate to sales. These are the homogeneous account we're talking here. It helps to group such account and relate into a given transaction, especially that of sales and purchases together for decision making. Next, it helps in detecting missing figures in business transaction. You know that this is where control account help in preparing single entry. Single entry or incomplete record are records when prepared, they are not in conformity with the double entry system of bookkeeping, whereby either a single account is maintained or most of the accounts are not maintained. So in the case of trying to prepare the final financial statement, you discover that you might not be able to see the exact amount of sales or the exact amount of purchases or wages or anything that you want to see. So the only account that will help you to get the sales, the missing sales figure, or the purchasing sales figure, or wages, or anything that is missing, it is control account, meaning you will control all the transactions that have to do with sales together to enable you know the missing sales during the period or missing purchases, or anything that is missing. Control account is the best account that helps you to prepare to be able to detect the missing figure. So it's a very good account that helps in preparing transactions that relate to single entry or what is called incomplete record account. It is the way out. So that is why control account is very important for learners to know how it is prepared, because it will now help you to solve these two major topics, single entry or incomplete record. It helps in bringing the account together, thereby detecting if there's a missing figure. In the process of preparing, the missing figure will come out and you go ahead and prepare your financial statement. Next, it helps to determine the total closing balances of account receivable and account payable for decision making. Here, if you prepare control, mind you, I'm telling you that the major division of control account, you can prepare control account in any account. You can prepare control account for salaries, whereby you bring all the salary payment during the period. You can prepare control account for wages, to bring all wages paid. Any account that you feel to prepare a control account, you can prepare, provided you are trying to bring all the transactions that relate to that account into one place to be able to know what happened in that account. It is a control account. But in accounting, the major concern of business is to prepare sales ledger control account and purchases ledger control account. They are the major two areas of control account, because this is the business is all about buying and selling. So emphasis is on what happened when there is purchases and what happened when there is sales. All the transactions that relate to that will be captured in one account. So we are saying that at the end of the day, the control account will help you to determine credit purchases and credit sales. And I want to emphasize here too that if you talk of control account, particularly sales ledger control account, or what is called account receivable control account, I want to emphasize that control account is prepared strictly on transactions that have to do with sale of goods on credit. sales of goods on credit, and other related transactions that come as a result of the sales made on credit. Control account is not interested when there is cash sales or when there is cash purchases. No, it is interested on transactions that is purchased or that transaction that on credit, either sales on credit or purchases on credit. So if there is sales on credit, after the customers will have to come back and pay. That is what control account is all about. If there's return inward, if there's bad debts, if there's discount allowed, and all what have you that relate to sales on credit, that is what control account is. Sales control account is all about. The same thing to purchases. The emphasis here is control account that we're talking about here deal with only credit purchases transactions. If there's credit purchases, transaction that involve in that purchases, the payment of the credit purchases, the return outward, the discount received, and anything that any transaction that comes as a result of the credit purchases, that is what control account is interested. And that is why I want to clarify. And that's why emphasis here is to determine account receivable balance. That is, at the end of the day, at the end of an accounting period, what are the total of credit account, that was called debtors? What are the total of accounts receivable? That is, goods that were sold on credit. At the end of the day, what is the final balance that customers are owing? That is what control accounts are about. By the time you bring all the transactions that relate to sales on credit, at the end of an accounting period, you're able to know the final balance that customers are owing. And that is what the business is most interested in. The same thing to account payable. Goods that are purchased on credit from suppliers, the transactions, and then the final balance of all accounts payable. That is, the money that the business is owing to suppliers at the end of the accounting period. Control account will help you to determine that very figure which the business is most interested in knowing it. That is the importance of control account. Next, fraud is minimized with the help of control account. With control account, fraud is minimized. Business, what is called business entity. The business is different from owner, and most businesses are being managed different from the owner. So if there's no control account, most business managers will commit fraud. That is whereby they will not be able to cheat in the business. It will be very difficult for you to detect how much exactly the amount that was removed or was embezzled from the business. But with the help of control account, it becomes easy. And that is exactly what auditors use in accounting. An auditor might not be there in the business, but he might come to audit account and tell you exactly that this amount here and so item was missing. You'll be shocked. Why? Because he is using control account. He controls all the transactions from the beginning of that transaction to the end. At the end of the day, he will not tell you that this is the amount that is missing in the business, and you'll be shocked. It is the work of control account. And that's why we know that most business managers know that even if they cheat in the business, the control account we use to be able to detect what the amount they have been able to embezzle from the business. So control account becomes very helpful to minimize the level of fraud, because even if you are committing it, know that as professional accountant come in, they will apply control account to be able to detect the fraud you committed. So as a matter of fact, so we are afraid to commit such fraud. That's what I say, with the help of control account, fraud is being minimized. Next, it helps to prepare interim financial statement for the business. What do you mean by interim financial statement? Financial statement is mostly prepared at the end of the accounting period, what we call trading profit or loss account, and then what is called statement of financial position, cash flow, and changes in equity. If you want to prepare an interim financial statement, the only way out is control account. It is control account that will be able to control most of this account into one area and bring out figures that will be used in preparing the interim financial statement. But if there's no control account, it becomes difficult because the business is here to come to an end to determine all the figures. So with the help of control account, you will control all the items or elements that you need and then use it in preparing interim financial statement. So control account helps in preparing interim financial statement with the help of controlling all the accounts that the business needs in preparing what they want at a given point in time. Next, the major heading here, as I said earlier, we are looking at the major division of control account. In accounting, I'm still emphasizing with all clarity that we have different, you can prepare control account for any account. I'm still repeating, you can prepare wages control account, salary control account, any control account can be prepared, provided there are different transactions that relate to that account. You have to control it together to get what you want to get in that given account. But the major areas of concern in accounting, which are always difficulty to learners, is in two areas, which we call the sales ledger control account, or what we call account receivable control account. The next one, we have purchases ledger control account, or what you call account payable control account. What do you mean by sales ledger control account? A sales ledger control account, as I say, emphasize, it is an account that control together or bring together all credit transactions that and other related transactions like return inward, discount allowed, bad debts, and any transaction that relate with the sales of goods or credit. Here, I want to emphasize that if there is cash sales, it should not be recorded in sales ledger control account. I'm still repeating, and that is why another name for control account, for sales ledger control account, is called account receivable. Account receivable means credit sales, that is sales that were made on credit during the period. And that is telling you that anything that have to do with cash sales or sales by bank, please, it should not be recorded in sales ledger control account. I still want to emphasize here clear that if you're talking about control account here, you are talking about credit sales. But somebody will be still confused, or let them be confused. When cash is being received from goods that were sold on credit, you record it in control account. Because don't misquote me by saying, I say that cash transaction should not be recorded in control account. No, that's not what I'm saying. I'm saying that when you make sales and it's upright payment of cash or check receipt, don't record it in control account, sales control account. But when sales is made on credit and later the customers are paying either by check or by cash, such transactions should be recorded in sales ledger control account. That will tell you that the cash payment or the check receipt is as a result of the sales that were made on credit. These are elements of control account. That is what I want to emphasize. Take it, and that is it. Next, purchases ledger control account or account payable control account. Here is the same thing. It deals with all credit purchases, all transactions that relate to credit purchases. When the business purchase goods on credit from suppliers, it will be recorded in purchases control account, and subsequently payment to the goods either by cash or by check, any return afterward, any discount received for all the transactions that will relate to the purchase of goods on credit from suppliers, they are recorded in purchases ledger control account. So these are the major divisions of control account. We have others, but this is going to be the center of our concern. So we are going to continue in the next lesson to see how we now identify items that are recorded in control account, and also we prepare a control account using the principles of preparing control account. Good day, I remain your accounting tutor charter. Don't forget to share my video, like and comment. If there's any question you want to ask, go down in the comment section, ask your question, like my video, share, because my task is simple. I want to make sure accounting understanding is reduced to the lowest level so that all learners will have the access to the knowledge they need to be able to write any professional examination or work anywhere as an accountant. Thank you. I remain chartered.